Hey everyone, Sherman here. So today is the 28th of March, 11:26 a.m. Hope everyone is safe and taking precautionary measures in light of the coronavirus. Uh, Many economies around the world are hit. Singapore is as well. But if you're trading forex, then you are in a recession-proof job. You know, uh, it's very volatile at the moment, so there's a lot of money to be made and lost. So let's try to be on the right side. Yeah. But let's come back to the markets right now. So let's look at the DEX. So from a trading point of view, there are two ways this will play out. One is it might play out this way. So it might play out this way. So right. So from here it might play out this way. But the other option is it could also play out this way, like this, and then it goes up here, and then this piece here can drop, it can start down. So this would mean it will create something like that. And then if it does something like this, then guess what? If it starts to do stuff like that, uh, means it's gonna push up again. Right? So at this point in time, the move that uh, would be of great interest, of course, is this one. But in order for this to happen, a lot of stuff still needs to happen right there. So hoping to catch this move, huge time factor involved. Huge time factor involved. Not okay. Um, right now, from a weekly standpoint, it's one move up, one move down. So from this time frame, it's not something that is. There are not enough swings right now to actually decide. So the buyers would require something sideways before we can assume that the upside is going to continue, right? From a swing point of view. So let's go down. Let's go down. Let's see what's going on the daily. On the daily. So okay, just remove that. Can we just remove this one? Just remove this one. And it's just my thought process. 1 second. Julie, when I'm talking, you can't just shout. So you can stand here. And then if I'm really talk to you, I'll talk to you. Right? Here you can go. Okay, close my door. You go. All right. So coming back. Okay, so this kind of moves are always the trickiest. Sharp up, sharp down. It's could also this way be doing something like this, and could this also be a start to the downside, right? That's also possible. That's also possible. So whether it is whether it's going to come down here, go up here, come down here, break up, and then come down like this, time will tell. Next week, the week after, time will tell when this move is actually going to start. Start here or start much higher. So um, uh, it's important that if you're into swing trading, it means swing trading meaning that you want to enter here, and you want to keep it to it and exit here. It means that you gotta wait. Because if you enter too early, it's going to take a toll on the trader psychology, and often people who get into early trades end up being stopped out. So you got to wait for the structures before deciding which way is actually going to go. Right? So that's the dollar DEX. That's a DEX. Okay. Let's look at see what pound dollar is doing. Okay, so pound dollar shut up. Did we talk about pound dollar? Let me just check. So you see here, pound dollar buy bias. So what happened was when when it comes down, uh, so this move up to this, you see this tip on this arrow, this level is where we want price to actually get to. So depends on how this was traded to the upside. So that's where the trading strategy is. If any point here you're looking for the sell, you gotta understand that the sell is short-lived. This bigger move to this level here, it is where the buyer should be. So trading to the upside, there could be quite a couple of scenarios. So depending on the trader's knowledge on how to day trade, he would have his way to make his way to the upside. Because again, this a bias is a probability. Uh, Actually trading the probability is a skill set by itself, right? So the upside is the direction we should be looking for, right? So oh, this is pound dollar. Hold on. Why did I put pound dollar here? Because let's go look at pound Swiss. Actually, that was pound Swiss. Yeah. So I made a mistake. So I was looking at pound Swiss and I put pound dollar buy-buys. All right. Okay. Well, but it's still the same, because of the correlation in the markets. Right? When people talk about no correlation, it's not so accurate, because the swing trader correlation is what we actually want to trade. Because when the big moves come, that's when the big money is made. And if you cannot make money when all the pound is moving strongly in one direction and the correlation is there, then where else is there to make the money if you're a swing trader? That's the only way to make the money. So correlation is so important if you are swing trading, right? That's where the money is supposed to be made, right? So in pound Swiss, pound Swiss upside was what we are looking for. So we are looking for the upside, like here. So you're looking for the upside, and depending on how you enter this, there's always a couple of ways. It could have gone up here, come down here, come up here, and then there's a wick. So you say, all right, it's double bottom. I think it's going to go up. So you just got to find a way to trade this to the upside. So the bias, after it came down here, the bias was up. So the bias is upside, right? All right. So this pound Swiss, so pound dollar, they'll all be the same. They're all correlated. They all push up. So if you try to sell the pound cat and buy the pound dollar, try to be a little bit too smart and play the currency pairs opposite each other. It's not a good idea, right? Because you see, they all push up, right? So let's just look at it from. Let's go here. This is pound dollar. I'm gonna put pound cat. I'm gonna put pound Swiss, and I'll put pound yen over here. Let me just clear it all. And just clear all these averages, so that you can put to rest that the myth of correlation don't exist, because it does. And that is, you want correlation to happen when you're trying to make money. So let's not get into the theoretical discussion of correlation don't exist, because you want it to exist at a point when you're trying to make money. Right, so just clear it up. So we have pound dollar top left, we have pound cat on the right, we have pound Swiss on the bottom left, and we have pound yen on the bottom right. So so I'm going to put my cursor on the top left, pound dollar. So you just see as it goes up. So from the day to day, they don't exactly go, they're not mirror images of each other, but the general direction, it's from bottom to the top. It's from bottom to the top. It's from bottom to the top, bottom to the top. How it actually gets from bottom to the top, they are not all identical, but in swing trading, you're looking to enter here and you're looking to exit there. So the general direction is you have to play in the same direction when you're trying to make big money in swing trading, right? They're not mirror images. Some go up, some will come down, some go up, some come down. But at the end of the day, they all push up in the same direction. Okay, so when looking for bias, looking for correlation is important thing. It's important thing, right? Don't let anybody tell you different, right? You're actually a swing trader. Okay, 1 second, I will have to. Hold on. How do I stop recording for a short while? So 1 second, pause. Okay, sorry, now I'm back again. So that was $10, so we cover all the pound CAD. So now we're going to move up. What now? Well, this is a good place for price action to actually come to. You know, you want price action to actually get there. Why? Because buy low, sell high. So this is a good place. It's all good places for price action to come to fill their orders. And what you actually want right now from trading point of view is you want a pullback. You want a pullback that looks like this, and then if you get a suggestion for an impulse, a correction impulse, this is a good trade to try to get up there. Of course, this may not be so simple. This could also come up here and then come back down like this, stop out people who are the early buys. You could go up and come down like this before it actually goes. So this is all the, so if you took a buy at the bottom, you have to get out here. Don't buy here and then get out there because you're going to be stopped out. You know, stops are going to be hunted. So if I'm a market maker, I want to get up there. Guess what? Stop out the people who want the early buy so that I can get in and then I will get up there. And this is how stops are hunted. So if people tell you stops are not being hunted, they don't know. Run far away from them. All right. So in order to fill my orders, if my market maker want to fill my orders, I have to take other people out. You know, that's how money is made in this market. So generally, what you want to see if you want to trade right now, you got to get out. You want to get there, but people who buy the top, when this happens, they're all going to be trapped right here. So if there are any signs of sell, understand that you're taking a possible retrace. But once this is done, understand that you're trying to get up to these levels, because buy low, sell high, right? Buy low, sell high. So I would say, even though I like price action to get there, but I'm looking for the sell. So the thinking is a little bit funky. I wanted to get there, but yeah, I'm looking for the sell now, because I'm trying to fuck some people up in order to get up there later on, rather than being too straightforward by thinking, okay, it's here, let's buy, let's go, just a little bit more. No, we must think in terms of like how do people get killed in this market? Try to think along those lines, right? Sad, but they don't tell you this in books. You will not. No one will tell this you can't find this from studying harmonics or you know the actual dead bodies, the carnage in the market is created like that. Okay. Let's just go to euro dollar and see what's going on. So I'm looking at daily right now. This looks pretty cool. I would say it looks pretty cool for upside. I think it's possible. I think that I would like the dollar to actually weaken. I like the dollar to weaken. The dollar could weaken, maybe state to start printing more money, you know, I don't know, to stimulate the economy or something. But what I like actually is for the dollar to weaken. Dollar weaken, maybe gold gets stronger. So, you know, it's just general rule of thumb advice, not always true. I've always shown that the myth of dollar and gold correlation is not really true. It's not true at all. You know, just because gold get weak, the dollar gets strong. I've seen them both go up and go down together. Okay, so not really true. And gold moves a lot and it's expensive to trade it. So be very careful about that general rule of thumb advice. Okay, so anyway, what I like to see, of course, is something like this. I would really like to see this, but around somewhere here, you have to get out, right? Around somewhere here, we got to get out. Yeah, so this is something that I'm looking for, but the reason why I don't like this was actually a pretty nice move up, to be honest. This was a nice, strong move here, you see. Nice, strong move, but without confirmation, you can see that it just splits all the way right down. And if this was to actually go up, right, see, moves like that, people who are the early buyers and anticipating this move and licking the lips that they're going to, make tons of money, and go buy their Mercedes Benz or whatever. Well, if the lot size was incorrect, they would all, and the lot size, and they may not have survived this pushback down. They were in the early buys, but someone just pushed up, and pushed up again. So people will stop out. Believe that people will stop out. There's a lot, but there is buying pressure, as you can see, strong. That means whoever was an early buy, and then they were forced to sell their positions when they were stopped out, and then someone took the buy, and that's why, boom, it shot up this way. This shows there's a lot of buying pressure right there. So what we want to see is something that confirms the upside, and then hopefully you can get to somewhere here. Right? You see all this? See all that? Hopefully you can get to somewhere here. And then this one, you decide again what to do. So hopefully we see some stuff that say, hey, we can get to somewhere here. Then let's see whether we can get somewhere there. Zone to zone trading. Why? Because why zone to zone trading is important? That's actually my style of trade. Even though I kind of feel the buy should be a certain way, but around here things can happen. That can happen. Because if people need to be stopped out for this to go, it will do that. So we should always, it's good idea to prepare for the worst contingency. So if market gets worse, you actually make more money. You actually want the market to become worse, because when the market get worse, this is your opportunity to actually make extra cash, right? Because you got out and now you can enter again at the low. So if you go straight through, well, unfortunately, markets don't often go straight through. Even they don't go straight through. It's always pretty tough. Pull back, 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 pull back. A lot of little pullbacks everywhere. That's going to shake a trader's confidence. And so taking some along the way, always a good idea, especially in swing trading. So that's my idea on euro dollar. I like the upside. I feel that right now, maybe in 2 weeks from now, this should be finished, and hopefully what we see is something, a move to the upside. Is what we're looking for. What I'm looking for, actually. So I'd like dollar to get weak. So EuroCAD, see, strong, right? So naturally, what I hope for now, can this like here and then down, always possible. So you should always have that confirmation. The bias is up. Let me check what it is. EuroCAD. Yeah, the bias is up for the EuroCAD. So you see anything like this here, plot sideways, yeah, it should go up. Find some reason find some reason, you see, find some reason. So whatever I drew here is like, you're seeing right there. So find some reason to buy. You'll find your own reason to buy. So what I'm giving is the bias, and there's this show called 21 where some MIT students and a professor went to Las Vegas, and they won millions of dollars from the casino because they were able to count cards. So here we are counting waves. We're counting the probability that price action is going to go in a certain direction, right? So these people count cards, we count waves, right? So now that we know that the waves are stacked in a certain direction, what we need is a way to actually trade the bias. Just imagine this. Imagine you and I go to the casino, and I say, hey, Bob, you should come over to this. I do some hand signaling, you come over, and then you start to bet, because I've already given a signal that the stack of cards are now in our favor. There are a lot of kings, queens, and jacks and aces, right? A lot of picture cards. So you come over, you start betting. But here's the thing: even though the cards are stacked in our favor, we are supposed to win now. But what are the chances are that the next round we are surely going to win? Are we going to put all our money down? Because even though the bus is in our favor, are we going to bet all our money? Obviously not, because even though it's stacked in our favor, but we don't know at which point in time we are going to get blackjack. We don't know when we're going to get 21. We don't know whether we're going to win. We're supposed to win, but it needs to be a series of plays. You know, about 5 to 10, 20. So once we place about 10 trades, we are supposed to win. We don't know if it's the next one, but maybe the one after that or the one after that. Then we might lose, and then the one after that we might win. But overall, because of bias in our favor, we are supposed to win. So trading is a lot the same. Even though we have the bias count that it's supposed to go up, right? That is supposed to go up, but we don't know whether it's going to, whether the next trade is like, is this going to go? 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 Will this go up, come here, and then go up? So at which point is it going to go? Since we can't confirm which one it is, it's a good idea. That's why I feel to take bits and bytes and just trade in the direction of the bias, but trade, but just take some along the way, take some along the way, take some along the way. You know. Then if let's say this one goes up there, comes back down here, goes up again here, then take some along the way. So you just keep biting in the direction of the bias. This is what it's like. It's what I consider good for day trading. Something that I use myself. Okay, but everyone has got their own style. Some people might just want to buy here and then wait till it gets there. And this one could spin in circles for all they care. Hey man, if that's the way you trade, then that's the way you trade, right? Um, uh, so that comes under trade management, you know, money management and trade management. So counting cards and counting waves give you the bias saying that the probability that you're going to win is there. But placing the next bet and the bet after that, there's money management there. So likewise in Forex, deciding how much to bet is also important because you cannot go in, you cannot go all in, even though the probability is stacked in our favor. Okay, bias plus trade management and money management they all go hand in hand. Okay, counting cards, knowing that the probability of winning is high, but you still need money management as we go about placing bets on the table, right? We don't go all in. So likewise in Forex, even though the odds are in our favor, we don't go all in. There must be some kind of money management there as well, right? So okay, that's all I say about that. Okay, so let's come back. So now I explain this one. So correlation is there. We hope that it goes up, basically. So what if this just paused like this here? Would you buy that? You should buy that. You should buy that, right? Or if it comes here, breaks this low here, and go weeks up, you should buy that, right? People are being stocked up, basically. Then it's a good chance to take people out and have it go to the upside. That means price action is going to be, that means the look will be something like that. Then this could be this could be here, and this could be up, right? So the price action maybe just crawl all the way down to this level over here. Take out all the stops, right? That's also possible, right? But don't lose sight of the bias, right? Uh, so yeah, that's what it looks like for now. So that's what it looks like for now. Euro pound, euro pound. There was a time when I actually spoke about this, and I said that this was that, right? This was this was something like this: A, a B, and a C. So, so I said the most nasty move that this could make. It's one of the videos in the past that I did. Now you can still find it. I said that the most nasty thing this thing can do, right? Because there were calls, sometimes people post me that this is like, oh, you're not going to go so much areas here that need to be hit. Well, well, the thing is that the most nasty thing this thing can do is to give the illusion that this move is done. And the worst thing that it can do is to come down, take out all whatever orders are there, and then stop when stops at above here, go and take them out. It was in one of the videos that you know, some months back there that I did this, and it did the worst thing that it could do possible. The lows are over here, come down over here. So anybody in the buy just put their stop losses at the previous low. So in the buy, they were forced to sell. So someone would have bought, people are stopped out. And then when it goes up here, people who are in the sell, stops are above, well, they're forced to sell. So market makers will buy low, sell high. But does this mean this is going to go up and break the top over here? No, not necessarily at all. You don't have to do that. This is a weekly, monthly time chart. So it doesn't have to do that. There's a lot of space you can. There's a lot of pips here that it has to push through. So not necessarily, but this whole zone here, there's a lot of hanky-panky that you know, the big players can do to maneuver price and just get people killed. So it did the worst case scenario. Okay, worst case scenario. So what's going to happen now? Well, the most ideal, what I would like to see, right? I'd like to see something like that. I would like to come back right now. So here's the thing. How do you know that it's going to go back down? What will up the probability? Probability is just counting cards, like going casino and you know, saying that this deck is stacked. Odds are in our favor to play, but um, how do we up the? Okay, so you're gonna start to see. You're gonna start to see. Right? So if price action somehow meanders, how do we up the probability that this is not going to break this high, but it's going to come back down? Well, I think now you all can roughly see, right? So let's say if I was doing this in the past, like so, and then you often see me put something like this, something like this. So what does that mean? It means that once price action breaks the trend line, somehow or other, this is going to make its way down, either to here, but the bias is going to be down. So in this case, the bias is going to be down. It's going to be down. But do you know how to trade that? That's the question I pose to you. Because people can draw charts, draw the bias, and few people can do that, and even fewer people can actually trade it. That's why I've had people from traders who apparently take money from footballers, like 200-300K or 100,000 pounds. I met bankers, so-called bankers. I don't even care if they were like fund managers or investment bankers. They can't trade. They can't trade like this. They can't trade the way retail traders trade. Right? Even they may work in Citibank. They can't. If they could trade, they will not be going to work every day. Like, the truth is that it's not so easy to actually trade stuff like that. Correct. But again, the bias, what we're focusing on is the bias. So make sure that you have a way to navigate shit like that. You know, to get from you know the price you get from here to here, but know how to manage your money in order to get from here to there. That's important. So if you find any reason, then don't forget things can go very wrong over here. Right? Not so simple. Now this is what I hope to see. But what if somehow price action just ends up crawling like that, pop up like this? So guess what? Yeah, that means maybe it is going to pop this top. So right now, on this weekly time frame, we just have to really see maybe in the next couple of weeks what exactly is going to happen. You know, is it gonna pierce up strong, come down? Ooh, this is interesting. So this retrace. So is it gonna come down? Like, ooh, interesting. So let's see what actually happens. Okay, let's see what actually happens. Um, Then we can decide what to do. I would say on a day, if you were to daily trade this, a correction or a strong move down, they are both downside. So I would say the downside is a better way to trade, right? Because even after a strong move, this thing would have looked like a correction to go up, but the whole move look is still down. So if you were here and it pushes up, selling it is not a bad idea. So I'm telling you the euro pound, you should look for a bias to sell. You should look for a way to sell this down. But again, when I say sell, I don't mean sell and then here, because you could be up 10K or up 2,000 and suddenly you give it all back. You know, just imagine you're on this side. Imagine you were making so much money, you gave it all back. Making so much money, you gave it all back. Make money, give it back. Make money, give it all back again. Depending on where your entry was. You'll be giving back like 80%, it's just 70%, right? So so my point is you're not supposed to, even though this is what could happen in maybe a year, but you're not going to sell here. Fucking hell, wait for this to get there. People who like draw charts, look, they're just chartists. They don't make money from actual trading. All right. So be smart. Trade, even though the trade could be down, but know that take and go, because you can do this and shoot up. If you shoot straight down, you can shoot straight up. Even though it was coming down in the end, but you can shoot down, shoot up, shoot down, shoot up. So the bias is down, but take your profit. Right? So okay. I'm in a mood for oil and gold. Right. So let's go look at SIA. Amazing, huh? 1, 2, 3, 4, 5. If this had gone up, this would have been easy sell, but it just dropped really fast. This was always going to be on the cards. You see. What can you do? So right now it's at an all-time low. What should you do? Fucking buy it. I'm telling you need to buy this. This is buy and hold, because once the coronavirus is solved, this has a very nice look for upside. Very nice look, right? Okay, anyway, Brent crude oil. And well, looking at the history of Brent crude oil, it actually once felt as low as 19 over here. 19. Lowest point. So you just have to be aware that previous lows can be broken, as you can see. So, and you can push that far. So likewise, so if price action can come all the way to here 19, what do you think you should do? So I don't want to say so much. Yeah, I'm just trying to chart for you so that you know what can happen. Always remember, when people take early buys, you need to know, or very aggressive early buys, you need to know how to manage when you go into drawdown. Are you slowly adding on? Well, what's your game plan? That's the trading part. You know that at some point this cannot possibly fall to zero, right? So it must turn. It must turn. But question is, could you survive the drop? Can you survive this drop? Many people can. So many people will just be okay for a while. When they think they're good traders, they suddenly start to go in, and all kinds of martingale and all that shit start to happen, and then suddenly the account goes bust. You just need one of these, and you measure the risk percentage wrong, and suddenly your account just can't take even a small move like that. A small move like that, the account goes bust, right? Or you lose half the account, and then suddenly all confidence is shaken. So know how to manage this. It's going to turn. There's enough said about that, right? Um, uh, let's go look at gold. Everyone's favorite. Well, gold is now at the top. Could do anything. It could do anything. It's really got to the top. What it's supposed to do. So for those who always staying in the gold cell, you should have been okay. Then once you reach the top, anywhere around this level, hold on, anywhere around this level here, start to get dangerous, right? Because all these are kind of stacked orders. They're all stacked right here. You see, they're all stacked all the way to the top. So once you push through, you can cleave through the entire piece. You see, consolidations within consolidations, basically. So once it pulls through, you can push through all the way to this last candle over here. Let's see where the last candle actually was. This candle, let me see this red candle right over there. This is over there. Yeah. Whoa, so you can still push. It has not really touched. This would be the most extreme, 1751. This is extreme. So let's see from Fibonacci, what do we get? They'll probably hit the 0.786. Okay, now let's just, let me just put it on so that we can see it. All right. So 0.786 would be this one over here. Okay, so yeah. So don't be surprised if gold finds its way to 0.786, which is if gold can hit 1728. Yeah. Even before it comes down, I mean, even if you think that gold is going to come down, but you cannot really say that gold is going to come down to this level. You can't really say that because nothing in this, you see, it's just big candles. It doesn't say that this is going to come down, right? So when you had this, at least you had an educated guess that this goes a certain distance. Right? Because you think, oh, I think this is the structure. I'm going to try to. I like the idea of impulse correction impulse. Right? So that seemed to work. But right now you're at this level, and all you have is this. So when all you have is this up down, you can't say that this was going to get up there like this. It's just But once you got small stuff like this sideways, then okay, so maybe this is going to go up. Okay, so right now all you have is up and down, and there are some levels here that still have not been hit. And that's actually a bias by itself. A bias by itself. So right now we're going to look at something like this. We're going to go down to lower time frame. Okay, and you see 1, 2, 3, 4, 5. Okay, so what's basically you want to see for a safe trade, right? Would be something like it goes up like here, then you want it to come back down like so, then you want this to go up like that. And preferably you have something sideways here that allows you to take the breakout to the top. So generally you want something like this. And when you see something like this, naturally once you get up here, you're going to exit because why? You're going to look for something like that. Maybe it drops further, but zone to zone, don't expect that, take off here. So what you want to look is for more stuff that goes sideways, that goes sideways, that goes sideways, that goes sideways, that goes sideways. Because if you have something like sideways, that means, hey, maybe I can get that, I can get that, I can get that, I can get that. So probably next week is going to be sideways. That means people who are looking for trend trades, who are conditioned to trade trends or algos that just trade trends, they are going to lose money. Right? So from a trading point of view, I would say you should look for the sell, but not this kind of sell, more like a funky, difficult kind of sell where you just take and go. Because why? When price action starts to do stuff like this, you're not making this kind of money. You are looking for something that's ranging like that, right? Something very difficult. And once all the difficult stuff is done, then this is what you're looking for again. So you should be trading to the downside. I think for this one, you're looking at trade to the downside, but not because of this down. This down is looking for something. This down is something that's much later on. When we talk about downside, we're talking about a ranging kind of downside, and it's not this kind. So, which means you need a trading strategy that allows you to trade the bias to the downside, but not this kind of down, but this kind of ranging downside. All right. The reason for that is because you're looking for a credit structure to go up. So while the credit structure is going on, you're selling down. Then you're looking for the buy. Once you finish, then you're looking for the big move down. Complicated, right? So if you don't know, if you're not aware that this is what can happen, there's no way that a person who only knows how to trade this stochastic, go back, stochastic buy, follow the stochastic, the low buy up, low buy up. They will not be able to trade this. When this happens, when this sideways happens, like here, sideways happens, so when this entire when this entire thing here, so when this thing here plays out there, people who have algos that trade this way will basically get fucked when this happens. So knowing where to apply what kind of trading strategy money management is important, is essential to know, right? So imagine this is our enemy. They might be throwing tanks at us. They may be throwing mortar. They may be throwing artillery. They may be bringing snipers. So if all we can do is counter snipers, then when the mortar comes, we wouldn't know what to do. So we need to have something to counter everything that comes at us. You know, so if you do MMA, someone comes in boxing, maybe you can go at grappling. Someone go at grappling, maybe you know how to some minimum grappling defense, but try to kick the person's feet, or try not to go to the ground so much, but have some kind of grappling defense. Someone likes to kick. Well, maybe you're good at grappling, you can catch his leg and do a toe crank or whatever, So trading takes a lot of skill, and I'm telling the bias, and I also trying to emphasize on the trading strategy itself and the money management. This bias needs trading and money management. Without that, drawing charts like that, it's just theory. Okay, it's important. It's important, but real trading requires trading and money management as well. It's very, very important. Okay, that's all I want to talk about. A little bit tired. Yeah, I should go for a swim. Take care and stay safe. Bye-bye.